All right, everyone. This is Matt Lengelgen with Never Private Wealth Management, bringing you our market commentary for October of 2020. And this month, we really want to focus on the election. Obviously, something that's top of mind for everyone. What's it all mean in terms of my investments in the stock markets as a whole? So we mean this to be completely non-political as possible. We more so just want to give some framing and some data behind what normally happens during that election time frame. So we're going to dive into the numbers, but the goal here is to make this as non-political as possible. So first off, just want to remind everyone, it's really more important to invest along your goals than it is to invest across party lines. Now, what I mean by that is we look at the chart here. What happens a lot of times is, humans, one of the most beautiful things about us is our emotions, and that's what sort of makes us human. But when it comes to investing, the stock market is incredibly rational and does not care about your emotions. And so what we find happen a lot is, for instance, a Democrat, when a Republican comes into office, wants to divest out of the stock market because they don't agree with the policies of the Republican Party and think that it's going to crash the stock market. Same thing on the flip side. A Republican will want to divest when a Democrat comes into office. Now, I think it's important to remember, getting outside of the politics, that whether you agree or disagree, everyone has a vested interest in trying to see the economy and the stock market continue to push forward, continue to go up. Now, you might disagree with the policies of a political party and how they're trying to make that happen. But at the same time, once again, we all are Americans, and whether you agree with it or not, no one's trying to tank the economy. No one's trying to tank the stock market. We want to see it continue to be, a positive, and the United States be a great economic place, for years and centuries to come. Along with that, and where the economy stands at the moment, is the uncertainty around the economy is at an all-time high. And there's so many underlying things outside of politics that have to do with that, such as the pandemic, just to name one, going back to March and everything that's happened this year. But it's such a polarizing election. I think this is where some maybe things have been at the most tense on both sides of the aisle in the history of presidential elections. Is there's not a lot of certainty. And it's important to remember that the stock market loves certainty. The stock market's always forward looking. It's looking 6, 12, 18 plus months into the future. And it's going to invest across what it believes and what it knows to be true going forward over that next 6, 12, 18-month period of time. When there is uncertainty in the stock market or the economy as a whole through things like different political agendas and different ways to spur the economy forward, such as Republicans have their version and Democrats have their version of what they want to see, how they want the economy to go moving forward, and taxes and things of that nature. It can add to a lot of volatility and a lot of uncertainty. So from that standpoint, where we are right now with how much uncertainty it is, we're starting to see that volatility spike up, more so on the economic side than necessarily the stock market. While still volatile at the moment, the underlying economics is incredibly high from a volatility standpoint. Now, along with that, something that we'll notice sometimes is when the incumbent party, so the party that's sitting in office, loses, there's usually some short-term volatility within that, just along the same reasons. So if a new party takes over, they come in with their own agenda, their own policies. They're trying to set things in their own way. And that's going to lead to a lot of uncertainty. So the way that things were priced over the next 6, 12 months maybe no longer is that way because of the policies that'll be coming into play. And that's going to lead to some short-term volatility. But once again, I just need to go point to the first slide when it comes to the fact that invest across your goals, don't invest across party lines. Finally going into that, we hear a little bit about the idea of a quote-unquote blue wave. So a blue wave would be if the Democratic Party in this election cycle took over the presidency, the Senate, and the House. And the thinking would be that during that period of time, it would be easier for them to push through their own agendas. There's a lot going on in this graph, but just to quickly show This is some of the proposed budgetary and policies that the Biden administration is proposing, and on the right is what we actually expect to happen. So the American economy is made up of or the American democracy as well is made up of checks and balances. That's what makes us democracy. That's what makes us great. And because of that, no matter whose party or whatever agenda is trying to be pushed forward, there's checks and balances. And if we look at the right from the proposed to the expected, we're seeing obviously a lot more muted policy changes than what's being said on the campaign trail, just because everyone's opinion must be taken into place, not just that of the people coming into office. So, point being is whether you're worried about a blue wave, whether you're excited about a blue wave, is not the point. What's actually proposed versus which actually occurs is going to be on a much smaller scale, and that's something worth remembering. I hope this helped to just give a little bit of insight into what we see and some things to have in the back of your mind as this election cycle continues over the next month. We're always happy to answer more questions and speak to what we've seen in the markets and the economy on a deeper scale. So feel free to please reach out, and we'd love to discuss further. Thank you.